So you're a Canadian employee, you've done your tax returns, you're being told you have a tax balance to pay, and it doesn't make sense, so you want to figure out why. You're not alone. Welcome. My name is Ida. I'm an accountant, and I get lots of questions like this. Earlier today, I was talking to somebody whose tax returns I was doing, and when I finished it up, I sent him a draft to say, hey, take a look at this, tell me if something doesn't make sense to you. I want to explain it all to you. Let's go. So the person looks at it, and first thing is that he's shocked that he's got a tax balance to pay. And his immediate question to me was, why am I owing a tax balance? Is it normal that when I file a tax return, there's a possibility that I could owe taxes? And the answer is yes. Unfortunately, a lot of people don't know this. They think that once you file a tax return, you're always going to be getting a refund. That is not true. When you're filing your tax return, it's more like doing a kind of reconciliation between what you have paid and what you should have paid. And if there is a difference, if you paid too much, then you get a refund. If you underpaid, then you have to pay extra. Taking into consideration other things that may affect your tax bracket, right? There are other credits you might have. There are ways in which you can reduce your taxes. This is just a simple scenario where I'm talking about a single person, and this can apply in lots of situations. But in this example, bear with me, think of a person who's a single person, no kids, no spouse, no nothing, and you have a high-paying job around the $100,000 mark. If you had a single employer during the year, chances are high that they did the deductions properly. If you had multiple employers during the year, now this is where it could get tricky, and that's the essence of this particular video. Because in the instance of this thing I'm talking about right now, this is a person who had an income around the six-figure mark, but it wasn't all from one employer. Does that mean you're going to owe taxes? No. Having multiple employers is not the thing that's going to cause you to pay more taxes. The thing that could happen, and which is the case with this particular one, is that when you are going from one employer to the next, as an employee in Canada, there is a tax form that you're supposed to fill when you're starting out a job. This is a TD1 form, which is the basic exemption. So everybody gets some basic exemptions. Within the year 2023 was around the $15,000 mark. So your first $15,000 of income has a kind of exemption on it. Okay. Now, it's an amount for the calendar year. So that's to say when you get your job in the year or at the start of the year, that amount resets. So let's say 2023 is starting. That amount has reset. Based on whatever the rate is in the year, your employer allocates that basic exemption to you. All is good and well. Because at the time when you have surpassed that amount of income, it's going to automatically calculate, like the rest of the way is going to automatically calculate, knowing that you have taken that basic exemption on the first $15,000 of income, whatever that is. Now, if you happen to leave the job that you're working at and you move to a different employer, and you don't tell that employer that this is your second job within the year, they are no magicians. They are not going to guess that you have taken that exemption on the first job. So here's what happens. When you move from job 1 to job 2, you had the basic exemptions on job number 1. But now you're at job number 2, and there was no communication to let the new employer know that you already took the basic credits. They will allocate the credits again to you. So this is credits times 2. If you got to the second employer and this is the situation that happened, the second person gets you the credits, okay? That means they are gonna under-deduct taxes from you because they're assuming that this is your first job within the year, and they are the only ones that are giving you that credit. Now imagine a situation where you have not only 2 employers, actually, you have a third one or a fourth one, and you did not communicate to each of the subsequent employers that this was your situation. Guess what's gonna happen? You're gonna get your basic credits from all of those employers. But when it comes to tax time, that is where you will feel the pinch. Because when it comes to tax time, like I mentioned before, it's kind of like a reconciliation of how much taxes did I deduct? What is the amount of tax I'm actually supposed to have paid? And then if you overpaid, you're going to get a refund. But if you underpaid because you had more credits than you were supposed to, then guess what? You're going to owe taxes to the government. Not because your employer made a mistake, but because there was an omission somewhere. And what's the omission? The omission is the fact that when you move from one job to the other, to the other, to the other, you did not indicate to the respective employers or to the next employer that you had already had a job in the year, and so those credits should not be considered for you. And I wouldn't expect you to know this. The employers are normally supposed to give you a form to fill out that you're going to send out to HR, and as they are setting up your payroll in the system, they take into account that information. In all my years of doing accounting here, I find very few companies that actually give you that form to fill out at the start of your job. So unfortunately, a lot of people end up in this situation where they get to the end of the year and realize I should have filled out a form at the start of my job with this new company so that the credits that are being deducted or the credits that are being allocated would take into account the fact that I have already claimed those basic credits at another job. In all my years, there are very few companies that do that. So for you watching this video, you should have communicated to the various employers that you had a prior employer within the same year. That way, there's going to be a calculation of the credit so that you don't get the credit at every single one of your jobs. But if you've already had it, now it explains to you one of the possible reasons why you have a tax balance to pay. So don't think your employer made a mistake. Don't think that, and I'm not saying they can't, but it's not because they made a mistake that you're having a tax balance to pay. It could simply be nobody filled out the form, and so you got more credits than you were supposed to get. And now was the time to do the reconciliation and get that money. Did I overpay? You get a refund. But did I underpay? Now you're gonna owe the federal or the provincial or both of the governments. I want to explain to you guys the concept of the basic personal amount. That is probably one of the most important things you're gonna learn right now. So there's something called the TD1. It's a form called the TD1. And this is a form on which you can indicate your claim for the basic personal amount. This is for Canada. For 2023, the basic personal amount on the federal side was $15,000. And this gives you rights to a non-refundable tax credit at 15%. So this would be $250. So that's to say your first $15,000 of income gets this non-refundable tax credit of $250. So if you only make $15,000 as your income, for example, you basically have no taxes to pay because this credit is going to wipe off everything for you. Okay. If you're in Quebec, this amount for 2023 was $17,183, and it gives you access to like a 14%. I'm rounding that up. So this is about $2,406 in dollars. Okay. So this basic personal amount, when your payroll is being set up, this information is useful for you to indicate to your employer what's particular about your situation so that this is going to be taken into consideration when they are filling out your payroll and everything around that. Now, this amount that you see here, it's an amount for the year. So this amount resets at the start of every year. For 2024, it's a different amount. We're going to get to that, but this relates to 2023, which is what this video is about, because you guys are filing your taxes right now. Now, with the concept of this, because it's an amount which is for the whole year, you can't claim it from multiple employers. Technically, you can do that, but at the end of the year, when we're doing your tax filing, it's like a reconciliation of what you paid minus what you should have paid. And that difference, if you overpaid, you're going to get a refund. If you underpaid, then you have to pay additional to the government. And this is just a very basic situation because there are multiple factors that could affect whether or not you get a refund or you pay additional taxes to them. But this is a simple scenario where I'm going to just use this to demo the point I'm trying to make right here. So if you have one employer, you probably would not have an issue because that one employer is only going to allocate you the basic personal amount of $15,000 for the year. The problem happens when you end up having multiple employers in the year, and that's not a problem, except when you don't communicate to employer number one or to employer number two that job is your second job. Now, when you're starting a job, you're supposed to fill out this form. In all my years of doing accounting right here in Canada, I've hardly seen employers who give this form out for people to fill. So how are you supposed to know that? Well, by watching a video like this one, it gives you the information that you're supposed to know for yourself. Now, I came across a situation where when I was filing someone's taxes, they had 3 jobs in the year. So employer number 1, employer number 2, and employer number 3. What's the situation? Employer number 1 had allocated the basic personal tax credit, which gave rise to $22.50 of a tax credit, right? Again, non-refundable tax credit. Employer number 2 had allocated as well that, which gave rise to another $2,250. And employer number 3 had allocated that, which gave rise to another $22.50. Now, these gave rise to a total of $6,750 in non-refundable tax credits allocated to one single person when you're only entitled to this. Now, on a month-to-month basis, what the effect you're gonna see is that you get more money in your bank account, more money in your as a net pay. But when it comes time to filing your taxes, your T1 personal income taxes, this quote-unquote reconciliation that is done between what you paid versus what you should have paid this reconciliation will be done in the back end of doing all of your taxes. And that's where you get to a situation where you were allocated more credits than you should have, and so you were deducted less taxes than should have been deducted from you. And this is one of the situations that will result in you having to pay back taxes to the CRA, or in the other case to Revenue Quebec, just based on a simple omission that you did not fill this form to communicate to employer number 2 and employer number 1, to employer number 2 and employer number 3, that you had an employer number 1 within the year. Why is this useful to you? If you don't want to be hit with a surprise bill at the end of the year where you have extra taxes to pay because of this kind of situation, then it is your responsibility to communicate to your second and your third employer that they are number 2 and number 3 and you already have a number 1. And the simple way to do that is by filling out this form, which, like I mentioned, most employers don't think to give that to anybody. So it's up to you to know that this is something you're supposed to do. Now, for 2023, that amount is $15,000 for federal and $17,000, $183 for Quebec. Let's do that, 2023 and 2024. So it was $15,000 for federal, and in 2024, it is $15,705. Again, this gives rise to a 15% non-refundable tax credit. For Quebec, that amount was $17,183 for 2023. And in 2024, the amount is $18,056. I believe it's still going to be like a 14% credit. So what is your takeaway from this? Ask for this form or go download it from the CRA website, fill it out, give it to your employer so that at the end of the year, you are not hit with the surprise bill of, oh my God, you got taxes to pay. This video is not about showing you how to reduce your taxes. The purpose of this video is to educate you on the existence of this form, which is going to take care of the basic personal tax amount and make sure that, at least to a greater extent, your employers are going to be deducting the amount of taxes that need to be deducted from you. I don't wish on this for anyone because it's a real pinch when you have to pay extra. And so that's why one thing that I encourage everybody to do is before you get to the end of the year, get your final paycheck of the year and give it to your accountant to do an estimation for you. Because if you're able to catch this thing early enough, then guess what? There are things you can do to lower your taxes. The purpose of this video is to explain to you why that happens sometimes. If you want to figure out how you can actually reduce your taxes, check out this video right next to me. I think you'll love it.